Good afternoon. You're watching Businessworld live here on One News. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Thursday. All right, the PSEi finishing strong today, finally breaching the 7,300 level. The last time we hit this mark was in January this year. Again, the PSEi up 0.2% to 7,311. Well, shares traded convincingly above 7,300 for most part of the session until a sell-off ensued at the tail end. But again, a last-minute buying, as you can see this chart right here, helped resuscitate shares here. 6 straight days of increases now for the main index. That's on the back of lowering COVID infections, which yesterday sank to 3,000, the lowest yet since July this year. The downtrend again prompted the easing of restrictions in NCR to alert level 3 and the introduction of the scheme to several cities and provinces nationwide. Offshore investors also today net buyers of local stocks with purchases at $6 million. Looking at our leaders and laggards for today here, more convincing rally for a number of stocks here. You have the likes of Aboitiz Equity Ventures, today's best performer, up 5.5%. Same thing with Leechiu Group here, up 5.4%. ICTSI likewise gaining as much as 4.6%. Yesterday's gainers, though, correcting today, you have converged down 5.6%. Bloomberry also in the negative territory. Now, worth taking a look at today would have to be nickel stocks. We did take a look at these stocks yesterday, but you see, nickel skyrocketed to a 7-year high in London. That's amid worries that dwindling supply won't meet resilient demand. Nickel stocks across Asia Pacific climbed today on the back of that news, but diverging paths here for our two nickel stocks. Global ferronickel, as you can see, represented by the green line right here, rising 1.9% to 2 pesos and 17 centavos a piece, while Nickel Asia landed flat after rising as much as 4.3%, still at 5 pesos and 58 centavos a share. Now, off to some IPO news here. This is the PSEi approves the 2 billion peso IPO of the medical equipment distributor Mediline. So that's going to be for 550 million primary shares and 275 million secondary shares, with maximum offer price at 2 pesos and 45 a piece. The price is set to be finalized on November 16, and the offer is going to run from November 22 to 26, with a tentative listing date on December 7. Mediline will go under the ticker MEDIC. So Mediline again positions itself as a healthcare pure play. At the helm is Virgilio Villar. He is the brother of one of the country's richest, Manny Villar Jr. Proceeds will serve as capital for procurement of existing products as well as build-up of medical consumables in inventory. But this time, let's step out of the local bourse to take a look at Bitcoin after it hit a record high on Wednesday, topping $66,000. It's after the U.S. launched Bitcoin Exchange Traded Funds, or ETFs. Michelle Gaba, CEO of PDAX, earlier in the show said that for those who want to ride this rally, better off buying the actual Bitcoin, since we have better protections here and where marketplaces and exchanges are better regulated. Again, looking at this chart right here, though, Bitcoin unable to sustain that level, but still flirting with that record, down 1.8% to $64,800. Here are other headlines we're keeping our eyes on. The government signed a project management consultancy contract with Chinese firms. That's for the first phase of the Mindanao Railway project. The Transport Department has inked this contract with the China Railway Design Corporation and the Guangzhou Wannan Construction Supervision Consortium. The first phase of the China-funded railway project spans 100 kilometers with 8 stations connecting the cities of Tagum in Davao del Norte, Davao City, and Digos in Davao del Sur. The DOTR has also restored its original target for the project's partial operations to March next year. That's from the earlier revised target of October 2022. Under the revised timeline, full operations of the Mindanao Railway is expected by October 2023, a few months later than the original target of June 2023. The China-funded Mindanao Railway will be the country's first train system outside Luzon. Now, in other news, the government is ramping up vaccinations outside Metro Manila. Health Secretary Francisco Duque says they will be meeting with local officials from Calabarzon and Central Luzon tomorrow. That's to discuss higher vaccination targets. Duque says vaccination efforts should also be focused in these regions, citing their contribution to the country's economic growth. Meanwhile, the Octa Research Group says the country's daily caseload may return to pre-Delta variant levels by end October. Octa's Professor Guido David reports that the country's 7-day average in COVID-19 cases is currently at 6,400, while reproduction rate has gone down to 0.55. Now, the Fiscal Incentives Review Board rejects PSEi's proposal to allow outsourcing companies to implement work-from-home measures based on total revenues. This instead of the current setup where a set percentage of their workforce are required to be on site, while the rest would work from home. Finance Assistant Secretary Juvie Danofrata says they rejected the request as it is not consistent with the government's strategy for a gradual and safe reopening of the economy. Last month, the FIRB released new guidelines allowing outsourcing firms in ecozones to have most of their workforce at home until March 2022, but 10% are required to report on site. PSEi has argued that this requirement could cause problems as many employees are afraid to return to their offices due to fear of COVID-19 infections. How is this bit of news going to affect the recovery of the office market, which has been heavily buoyed by the BPO sector? Let's find out about that and how the property market is doing as we talk to David Leechiu, CEO of Leechiu Property Consultants. Good afternoon, David.
Good afternoon, Jes. Thank you for having me.
Okay, we can sense a bit of apprehension here, at least on the end of PSEi, to have BPO workers slowly return to their offices. Again, the FIRB has already rejected their appeal. But is this what you're sensing on the ground?
Well, the BPO sector is really very cautious because they don't want the surge to happen in the workforce as we move closer to office, migrating back to the office. And so for as long as the vaccination isn't at full swing and we're getting there, then it provides more comfort for many of these companies to work from home.
Mhm. Okay, what's interesting though is that based on your latest report, again, the IT BPM sector has been driving that demand for the office space. How exactly did that happen when majority of their labor force, I mean 90%, is still allowed to do remote setup until March next year? So how exactly did the sector drive demand?
So as we predicted back in April 2020, we anticipated drive from many Western companies to bring more jobs to the Philippines, and that's what they're doing. Many of our clients, millions of square meters renewed their leases, and then in the full year 2020, they did 389,000 square meters of office space. In the first 9 months of this year, they've done 383, so almost the same number as what they did last year in just 9 months. So I think we're going to end the year at around 500,000 square meters of new leases. It's a validation that many companies, despite work from home and despite all the concerns about COVID, many companies want to go back to the office, and they want to, because they know that ultimately that is the most productive environment for them. Many of the clients want them back in the office also. And that's a phenomenon happening all throughout the world. As the populations of of countries get vaccinated meaningfully, they go back to the office.
Mhm.
And that's going to happen here also. If that was not the case, then many of the tenants that had leases expiring in the last 18 months would not have renewed. And they would not be renewing 5, 7 year leases. They would only be renewing for 18 months or 2 years. But the reality is that a very, very small amount of office space was contracted by the BPO sector,
Mhm.
less than 2% of the total BPO footprint. And that contraction has been meaningfully offset by all the new leases that the BPO sector has done. In the first 9 months, the BPO sector took down 44% of all transactions that have happened in the country in the office sector. And so by 2022, next year, as the West stabilizes, because they are meaningfully vaccinated and they're fully open, the next thing they're going to do is to drive more jobs to India, more jobs to Philippines. And we have to make the country ready for that.
Mhm. Well, okay. But again, one important thing as well is that it's only now that we're seeing easing, especially in Metro Manila. But how did months of strict curbs affect office take-up in the third quarter?
Well, obviously, the third quarter was hit hard for office leasing because a lot of people got scared because we were hitting 20,000 cases. The vaccination program was not rolling out fast enough, and the lockdown happened. And so I think everyone's in lockdown fatigue, and I'm so glad that we're reversing that now, and we're very quickly opening up the city. So there was a slowdown in the demand in the third quarter, the first time it's happened in the last 6 quarters, but it is still higher than the trough
Mhm.
of 2020.
Mhm. Now, again, you have key provinces like what you mentioned earlier. A lot of areas in the country, at least now, loosening restrictions. Key provinces now testing the alert level system. Cebu and Davao included, as well as provinces from Region 4. How might this push figures for the fourth quarter?
So I think more and more companies are going to expand in the provinces, and I want to commend again Mayor Treñas of Iloilo, the darling of the BPO sector, because it has received a very large proportion of all the office space that went to the provinces. In fact, it received something like close to 40% of all office leasing outside of Manila in the BPO space, and that's why MegWorld and SM are all enjoying record rents in Iloilo because there's more demand than there is supply. And so I congratulate those two companies also. And there will be more geographies because the BPO sector is looking for more labor markets to tap into. And so um, another very interesting development is North Ilocos Norte in Lawag and San Nicolas because they surprised everyone. Many of the companies we brought there started off with 500 people. Now they have 2,000, 3,000 people. Totally unexpected. And I think Tugigaraw should be fit for expansion of the BPO. I think Bohol should be a great option, and Puerto Princesa. And that's just 3 or 4 of my top picks of many, many other cities.
Okay. Now, other than BPOs, what's interesting about your report reading through it is that you still seem bullish over Pogos despite what many dogs its
Yes,
exodus. What's driving this
yes.
confidence?
So uh, we've had a bell curve in terms of office contractions. So office contractions are companies that are terminating their leases and shrinking in size, and so that became bell shaped, and we have the contractions have been at the slowest it's ever been to date
Mhm.
since the start of this global COVID crisis. And that is a very strong sign that companies are done contracting.
Mhm.
And the biggest contractor in all industries is the POGO sector. They comprise about close to 55% of all contractions in the country. And I'm glad to say that they seem to have stopped contracting. And so if you look at the total footprint of Pogo office space, 1.7 million square meters, they contracted something like 35% of their entire footprint. And it looks like they have stopped at that point. And so now that we've opened up the country to foreigners coming back into the Philippines, that's going to reactivate the labor market for the Pogo sector, and that's going to populate their office space again. And I'm hoping that in a few months' time, they're going to start expanding.
Okay, again, when talking about POGOs, for a period, it has also bolstered the residential market. So does that mean that there's much hope as well for the sector?
Yeah, the hardest hit sector is well, besides retail and hotel, of course, is the mid-end condominium market, and rents there, especially in the Bay Area, have come down by as much as 35-40%, and that's because of the loss of the POGO sector. Just as they contracted 500 something thousand square meters of office space, they probably contracted 600 to 700,000 square meters of residential space.
Mhm.
But now we're hearing and seeing traction in dorm space and condominium space again being eaten up by POGO. And that's going to just keep increasing as more and more foreigners come back to work in the Philippines.
All right, some level of optimism there, not just for the POGO sector, but even for the residential market. Thank you very much for your insights again this afternoon. Leechiu Property Consultant CEO David Leechiu. Thank you, David.
Thank you.
And those are the biggest stories this trading day, October 21, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open at 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe. That means